Josh, as we sit here halfway through the year, I think back and it's been a year filled with a lot of negative news headlines and concerns. But another surprising element is when I sit with clients, they're pleasantly surprised at how well portfolios have held up amidst all of this noise. So I'd love to hear from you. Why have portfolios done as well as they have?
So when I think about 2023 and 2024, the vast majority of markets were driven by the S&P 500, and the S&P 500 was driven by around 7 companies. That's what we call the Magnificent Seven. It's been referenced a lot in articles. When you look further back, it's actually different pieces of the market that tend to outperform each individual year. So we have a great graphic called the quilt chart here that we'll pull up that actually shows you what asset classes perform the best and the worst over each year, going back a number of years. What you'll see is a white box in the middle that focuses on asset allocation. What that is a diversified portfolio. And as you can see, even though US sentiment has been a little bit lower, we've had other areas of the market, namely international, that have outperformed, bringing portfolio returns up to a respectable level for where we are in 2025.
As you said, Josh, too, the great thing about this chart is that there's a lot of consistency to that asset allocation portfolio. And we believe deeply that the best way to build a long-term successful financial plan is by having consistent investment returns matched to your needs.